Welcome to the Service to Syndication Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, capital raisers in the world who have worn the uniform of this great country, those who provide services to our men and women in uniform, and other service-oriented professionals to provide you with the tool sets, the mindsets, and the skill sets to help you conquer your dreams and goals in real estate and to use this wealth creation vehicle so you can live a more successful, happy, and fulfilled life of generosity and prosperity. If what you desire is time, lifestyle, and financial freedom, you've come to the right place. We will bring to you the best real estate entrepreneurs who will give you the insights, the knowledge, experience, skills, so you can go out and crush it in whatever real estate asset class you desire. So grab a pencil and paper, sit back, and enjoy the ride on the Service to Syndication Podcast. Hello, my servicemen and women. Welcome to another episode of the Service to Syndication Real Estate Podcast. I am your host, Cedric Marlowe. Here on the Service to Syndication Real Estate Podcast, we interview the most successful real estate entrepreneurs, capital raisers, and investors in the world, where most have donned the uniforms of our great country. We aim to provide the tool sets, the mindsets, and skill sets for you to achieve your personal and business goals while using real estate as a wealth creation vehicle to help you live a more successful, happy, and fun-filled life. I am super excited today because I have with me Mr. Emil Brown, who is a top-notch commercial multifamily investor. But before I properly introduce our exciting guest to you, I want to ask a favor of you. Please, if you get some type of insight, mindset shift, if you learn a new skill, new information, receive inspiration or motivation to go out and take some progress in your life, please share this episode with some of your friends. Send it to someone you know who might be or could be interested in real estate. Share it on your social media, post it on your wall, and share it in your stories. Help us spread our message while you help others. And for all of you who share this episode, I want to say thank you. Again, everyone, I have with me Mr. Emil Brown. Emil is a real estate investor based in Cincinnati, Ohio, and the founder of Kalaloo Ventures, where he focuses on apartment acquisitions and asset management. Since transitioning into real estate full-time in 2020, Emil has applied a disciplined business-first approach to building multifamily investments. Prior to real estate, Emil built a diverse career across insurance, hospitality, sports, and operations, with experience at Great American Insurance Group, FC Cincinnati, and Restaurant Associates of Cincinnati. With a background in accounting, auditing, and fixed asset management, Emil brings a unique operational and financial perspective to creating long-term value in real estate. First off, welcome, Emil.
Thank you, Cedric. Happy to be here with you today. I'm looking forward to this great session.
Awesome. So, Emil, before you became this very successful person I see in front of me, in about 2 to 3 minutes, give our listeners a little bit of your backstory, like where you grew up, how was your upbringing, and what in your past shifted your mindset into becoming the person you are today.
Well, thank you. I'm not sure we went over this earlier, but I grew up in Antigua. That's an island in the Caribbean. I've been watching a little bit of cricket lately, and that's more described as the West Indies. And so hospitality, Curtain Bluff Resort was behind me, lived right next to it. So at the early age of 9, I was exposed to, five-star hospitality. And this was in terms of serving the guests that were at the tennis courts. So the service side was first. That led me to Cincinnati when I was about 16. Played at Harper's Point Racket Club for tennis. As it would turn out that I was very good at soccer, and I went on to college. I actually was a Hall of Famer there until someone broke my scoring records. And then I would come back to Cincinnati subsequently and work in the restaurant business, restaurants. That would be Rack Inc. And that was more the Burger King vein. There you kind of learned how to create, significant revenue with teenagers, people that were high schoolers, and something the McDonald model, I guess, kind of teaches you. You miss how significant that is in that you're doing asset management, you're doing customer service, you're also producing a good, a consumable good that, you've done wrong, you could hurt folks. But if is poor quality, you will lose customer base and it'll erode. So I was able to do that. And then, I got a great opportunity to be the CFO of Curtain Bluff, which I guess you call it financial controller later on. And I went back and did the work there. That was a fantastic experience. It was like a full circle. I got to the US because of Curtain Bluff. There was a program where you were able to use scholastic ability with athletic ability and get a scholarship to the US through the Old Road Fund. So I was a benefactor of that, and I went back and was able to actually put into practice all the skills I got for my accounting. Because I did that, I have a bachelor's and a master's, which a Bachelor of Science in Accounting and a master's in and an MBA with an emphasis in accounting. So I had all the theoretical background, and it was really good to put that into practice. But the goal was not to stay in Antigua because the U.S. When I'm in the U.S., I felt like I could accomplish just about anything. There were the opportunities to grow, and so I wanted to come back here. So we came back. I worked with the Burger King Group for a minute, and then I went on to FC Cincinnati. I guess I was trying to figure out, what my passion was. And backstory, working in all those areas, the one consistent theme is cash flow. So it was great to see how the cash flow worked. And so you work and you work and you work, but then you realize the true goal is self-employment slash having your own business. And one of the best ways to actually accomplish that, which is financial freedom, is through real estate. And so I was turned to that, and I'm like, man, that is where it's at. And so I set out on a journey to learn that. Became a realtor. I took the license, passed it, and then I realized you do need a team and you need partnerships. And so the journey continues, and I'm building that out very aggressively now.
Okay, nice. So now take us back to the beginning before real estate. You built a career, as you mentioned, through insurance, hospitality, sports, and operations. What originally drew you into those industries?
Well, that was a great question, Cedric. That was a great question. So at the age of 15, maybe a little earlier, we were in high school. We would plant like crops as a part of, education. And I learned how to grow peanuts. Man, I hadn't thought of this in forever. But I learned to grow peanuts in the agricultural department, but it was because of economics. For whatever reason, the economics was like, man, this is awesome. It just, it grew with me. So another background is I grew up with my parents being farmers and fishermen, so it was all around it. But then I realized that there was a little bit more science behind this, and that just blew that out. And I was set on a journey to get the maximum education I could in the field of economics. And the schools I was exposed to didn't necessarily have the finance angle, nor did I want to do the economics angle.
Mhm.
But what ended up being my field of choice was accounting, and I feel now that was the best because you learn exactly how all the different departments of business come together, whether it's marketing, operations, sales, marketing and sales, operations, and obviously the finance. They all come together, and for the business to be successful, they all have to actually meet the vision, and then the profitability has to come through that. So it's quite fascinating.
Okay, looking back, what common thread do you see across those early roles that ultimately prepared you for real estate investing?
So, well, I guess I might have mentioned this, but cash flow. Cash
Okay.
flow is the thread that runs through it all. And, while it's easy to know you have to have more coming in than what's going out, the management of that is really what makes the difference. How well do you manage that? and you have to manage so your intake exceeds and hopefully at a surplus level your outgoings. And so that's kind of that's what I've learned.
Yeah, absolutely. So, like for listeners early in their business career, how important was it to build business fundamentals first before stepping into real estate?
Well, I could only speak for myself, and there's a catch 22. So I will say I'll warn you. When you build those fundamentals first, then you kind of have the chance of having analysis paralysis. Because you if you understand them well enough, you know that the execution is very difficult to achieve. And then if you don't have enough margins, I've been watching a few podcasts. The alligator will eat you will eat the prize, so you'll be eaten by the alligator. In other words, the servicing of whatever you're doing, if the revenues don't supersede that, you will end up not having enough capital to service that, and then you'll be negative and obviously end that.
Yeah, I totally agree. Like analysis paralysis, man. I mean, that is a real thing. I mean, for me, even when in my single family days, like I was that guy. I needed to know everything about everything before I took action, because I didn't want to be out there on an island by myself. And it's like, well, okay, what do I do next? So literally from 2015, I believe, up until right around 2017, I was going to every RIA group meeting in my area, learning what I could. I'm not going to lie to you. I was at RIA group meetings anywhere between 2 to 3 times a week because I needed to learn. I knew what real estate could do. You being in these mastermind groups, you know what real estate can do for you and your family, but at the same time, I needed to know what I needed to know. So, when you say it is a catch 22, it really and truly can be for a lot of people. And, taking that action, that first step is the first part that you really need to do to move forward.
True. So then I guess to really answer the question is yes, it's for me, I am not a fish out of water in real estate because
Nice.
of the preparation. And I guess earlier in my career, I was able to understand that it was all about cash flow.
Hmm.
So if you talk to any normal business person right now, if you tell them sales or if you tell them expenses, they actually think of the actual good that you're selling, the actual expenses that you're paying. So you're buying a widget and you're selling the widget at a higher price. That's kind of how the brain normally works. And maybe it's because of my accounting background where debits equals credit. you
Hmm.
know, when you say sales to me, I think cash in. When you say expenses, I think cash out. So
Hmm.
I never think in terms of the product. I think in terms of cash flow. And I adopted that on an early basis. So just wanted to put that out there.
Yeah, I hear you. And by the way, I totally applaud you for the accounting background. I just as I have my MBA, but dude, I sucked at accounting. I cannot lie. Finance, I was good to go all day because I had that dream of working on Wall Street, which of course didn't happen, but nonetheless, I got the paper, so
Yes,
it's
right,
all
right, right.
good. All right. So, as I mentioned in the bio, you spent time at Great American. How did working in insurance shape the way you think about risk, downside protection, and capital preservation in real estate?
Well, interesting you should say that. When I was at Curtin Bluff, we also had a syndication, and we were self-insured with the hotel.
Mm,
And you don't know what's going to happen. So you have to protect yourself against the downside. And in this particular case, while there's revenue and sales protection, you're actually looking for catastrophic events such as floods, hurricanes, especially in islands, hurricanes, um, you know, water pipe breaks, revenue interruption from catastrophic events. So you learn that while you may not continue to earn, you want to minimize or limit your actual cost to recover. So you want to have somebody carry that cost for you at a nominal fee. So I think it's very important to shore that up. And to a big extent, I also, you might not seen is I did work at Northwestern Mutual in the life insurance field, and that
Okay.
is another form of insurance. And what that does is it really protects or hedges your, I guess, your asset, which we call your estates, at the ultimate time, and then kind of provides a little bit of a cash flow to help your I guess your survivors, so to speak, your heirs.
Okay.
Yeah, yeah, yeah.
Yeah. Nice. Along that same line, how does your background in auditing and accounting influence the way you analyze deals today, especially during, say, like due diligence?
Well, I guess one of the great presidents was it Lincoln says, trust but verify.
Yes.
You know, you can't say there are 20 pieces of chicken and there's only five. That doesn't work. You can't say the roof is solid and then you got hit by, whoops, the structure is not good. You got to have to replace the roof. Here's a 5, 10, $15,000 replacement cost, and if it's the big projects, a couple of 100,000. So auditing just says, all right, I know it's supposed to do this. It looks great on paper. Let's go inspect. Let's make sure. Also, yes, you're claiming that you're charging this much in rent. Okay, let's just look at the numbers. I trust you. I believe you're an honest man, but maybe your employees are not upfront. Maybe the rent is stated at $15 and they're charging $5 or 10. So you just have to make sure those are there, because in commercial real estate, it is all about the net operating income. And that is derived from each unit delivering the gross revenue and you managing the expenses to ensure that NOI is reached, thus the valuation. So it is absolutely paramount. And it is science. You got to take the emotions out of it. It's just science. You just got to make sure they're there.
Yeah, and that's one thing about it, man. You really and truly have to take your emotions out of it, like you just mentioned, because you can have this apartment complex that, I don't know, maybe it's in your hometown. I don't know. It's in your hometown. You know it. You want to show your family, everybody that's in your hometown, that you own that. But the NOI doesn't justify the price. And also, like you were saying, the roof needs to be repaired, but for whatever reason, the seller isn't gonna fix it. And so you're already behind the eight ball with CapEx. And so
Mhm.
you really have to remove that feeling, I really want this, I need this, and really pay attention to the numbers. And one thing that I'll add to that also is the numbers are the numbers, but you also have to look at the potential. And the only way that you can really pay attention to the potential of that project is be intimate, going back to, especially if you're very familiar with the area, if you know that, I don't know, gentrification or something that's going to happen, or a plant is
Yeah.
going to open up right next door or a couple of streets over. So the more you're more intimate with the details of the community, the better it can be for you, even if the numbers don't necessarily justify the price, but also you definitely still need to pay attention to the numbers wholeheartedly.
Yes. I
Yeah.
will I will put a little note there, heads up. If you're looking at the future value, that is not the current price.
There you go.
I'm a very
Exactly.
rigorous underwriter. So yeah, that's if I manage properly, I could get to that. But as
Yes.
of today, so I guess that's for something for you to keep in your back pocket, and obviously don't buy at that price, because that's a lot of time, that's a lot of capital, human capital, and actually cash capital that you have to exert to get to that future price. So yes, I hear what you're saying, but I will also say, yeah, I wouldn't be cautious not to run in, but you could negotiate for better
Yes.
pricing.
Absolutely. Me and some people in my mastermind, we were going over this, and pretty much the leader of the mastermind. The question was, basically the broker said that the price is this. soon as you do these repairs and you do this and you do that, so the price that they're asking for, that the seller's asking for, is justified. And the mastermind leader, he was like, well, okay, well, you tell them that you'll pay that price as long as they will do the work that they say needs to be done to justify that price. And
Yes,
then
sir.
I'll pay that price.
Yes, sir. Yes, sir.
Yeah,
That's very important to note because yeah, we could talk about what it's gonna be, but we have to pay what it is.
absolutely, wholeheartedly. So now, Emma, what are some red flags in financial statements or operating reports that like passive investors should understand but often overlook?
Well, that's an interesting one. I think we kind of went over those.
Hmm.
The statements will be obviously liquidity. Okay, if you had to, I had to think about them in that terms, and they're consistent throughout business. By the way, a multifamily is its own business. You're literally operating a business. So, how high is the debt? What is the equity? And what is the liquid equity, as in cash? Not necessarily just the valuation, but what does the bank account say? How long are your accounts receivables being dated? In this case, is the rent past due, or how many of those fees? How high are those late rent fees that you're collecting? You got to make sure those are low. You got to also make sure that you could extend, if possible, your payables where necessary, just to make sure that the the ac- the the financials do show a profitability. The other thing you have to do when you're doing your due diligence, I guess, is what you're saying is if they're in disarray, if they're not very organized, if they don't have a accounting software managing their business, that's also a red flag because things will get missed if they don't
Hmm.
have proper processes to ensure that comes in. So that's fine. Also, you want to make sure the cash flow statements do tie back to the bank statements because one thing will be saying X and then the bank statement will saying something else.
Yeah. So we've talked about the financial part, when you worked in hospitality, restaurant, sports, and the equipment businesses. But what did those roles teach you about operations, systems, and people management?
So when I started out earlier in the people management, it was kind of a bull in a china shop. And well, because if you could lean, you could clean. What it says, you don't want to waste time if there are things to do.
Hmm.
But then it matured to you become more of like a mentor. You're stewarding these individuals, and what you're trying to do is to get them to perform collectively more than if they were doing it on their own. So you get exponential outcome. And so, how do you motivate them? Oftentimes, it's not cash based. It is feeling a part of the decision, being a part of the decision making team. It's understanding that life be life in, as Mike says all the time. Like situations change. You plan to be somewhere or you plan to have something done, and something pops up, something unforeseen, which is just normal life. How do you adjust for that? Do you
Hmm.
pack any redundancies in? Do you have duplicates where necessary to make sure that the downtime goes away? So the big thing is customer service for managing people. But if they feel like you are available, and the tenants that is, or if the customer feels like you care about what they care about, they'll ultimately be happy and they'll continue to visit your establishment or continue to be a renter with you. And so that's what I learned. But I also learned that like you got to trust and verify. They intend to do well, but something pops up and they may not communicate their failure to perform. So you obviously have to be mindful of that and watch that. And so I moved from, again, bull in a china shop approach to maybe you screen a little bit better on the front end. So you
Hmm.
minimize people that don't necessarily take responsibility and show full accountability for their individual tasks. If it has to be done, it has to be done. And what are they willing to go above and beyond? But also you have to reward when they do and as they do that.
Yeah. Okay. So, again, we've talked about, you being, W-2 employee with various organizations. What was that moment or realization that pushed you to move from W-2 roles into becoming a full-time real estate investor?
So you don't really have control of your time. You got to be at work when it's time to be at work. You have to request times off when it's needed. But also, and most of the, I guess, books or materials you read about long-term wealth building or freedom and time control, you don't have that if you're an employee. And so, how do you actually acquire that in an environment where it's lasting? In real estate, ultimately seem to be like the best option. And real estate, because of syndication, ends up being one of those areas where you pool your resources, people, like-minded people. You've proven your worth, where you'll be able to be profitable in your establishment, and you can just secure your future a much better way this way. But I don't know that it's fully me realizing or not. I don't know that it's fully me choosing this because I found out that it was better. I was just not built to be an employee. So it's tricky, but
Yeah.
so my recommendation is you have to understand how you're built.
Okay.
And yeah, it is definitely not for everybody.
Hmm.
And you have to have a big enough revenue source to where, you could continue on through those skinny moments within the business. So I think that's really what that was. And early on, also, I figured out I wanted to be a business owner. So that was already on the bucket list of things to do. And I thought I would go work for someone and eventually buy out their business. But then I forgot, oh, they have kids, and then and then that's going to be the next captain of the ship. It's not going to be me. But
Right.
in real estate, I could definitely build as strong, maybe even a stronger ship, because I could bring in some principles and values that hopefully could sustain, improve upon what they've done. And so yeah, to me that ended up being the better option for me.
No, no, thanks for definitely, letting people know that, especially entrepreneurship in general, it's not for everybody.
Yes.
There are people that who have W-2s that can be entrepreneurs. Entrepreneurs inside of organizations are those people that are hitting those milestones, inching up the corporate ladder. And it's okay. It's totally okay. And like you said, you have to know how you're built. That's what I
Correct.
really like that, I want all my listeners to understand is like you just have to know yourself to find out whether or not this entrepreneurial journey is for you or not. Yeah, that was great, man. That was great.
100%. 100%.
Yeah. So now, going back to the real estate, why did you choose apartments specifically as your primary asset class?
I guess the simple thing is people have to live somewhere. If you high level, you got to live somewhere.
Yeah.
Now, I've been working with how to best present that. So within the real estate world and the commercial real estate, the net operating income determines the value of your business. And we call it a cookie cutter type setting where there is a Walgreens or a Kroger or you name them. You have a big building and you're locked into 5, 10, whatever number of years, regardless of the netting, you're locked in. You can't push the rent on that for that full period. And so with multifamily, you have 100 units, you could push the rent, 50, $100, and immediately increase the value of your company or your business or that particular property if you manage the expenses. So to me, that's just exciting, very exciting. And I also like, the housing part of it and where I'm interacting with people in a hospitality type setting. So it kind of works for me. But to me, that's the one that you're able to do. You're able to manage the best in the multifamily, in the actually commercial real estate space. But I might not have looked at all of them extensively. I've kind of, zeroed in on this and thought, this is where I needed to go.
Okay. So now at Kalaloo Ventures, how would you describe your investment philosophy?
So the investment philosophy, that's a good one. I was literally working on that today. So we have a couple of principles, and I don't want to get them wrong. So let me do something real quick here, and then I could probably talk to you. Can you still see me?
Yes.
I did a couple of things today, and that's quite interesting. I should have been looking at that while we were talking. So in the interest of not misquoting that, let me kind of I was working on that today. Okay, so right now I've been defining the some principles that I'm working on. The principles are judgment comes before math. We're business owners, we're executives, anyone who's hired people or made capital decisions. This is kind of what you think about. What they're looking for is the model didn't fail, the decisions did. So how well are you at making decisions? That's one of the areas that we look at. Also, we look at, risk is structured, and this is about capital stacking and how things are paid out. It's not
Right.
implied. And we so you have to understand contracts, hierarchy, and consequences. You need to understand senior versus junior positions. You got control versus exposure and responsibility versus reward. So yeah, these are very high level thinking. It kind of just goes through you kicking the tire to make sure it's there. Speed is a liability. Uh, you know, you kind of want to be very careful how you go through things. You don't want to rush your hires. You don't want to rush acquisitions. You definitely don't want to expand faster than you need to. Getting out of ahead with your skis, that term that you use.
Yes. Yes.
Yeah, you know what I mean?